Good morning, Green Room. And those of you on YouTube, welcome. All right. So, Robert asking about black candle for yesterday in the Qs. Right? So, this is the way black, red, it all depends on the platform, how you want to set it up, of course. In reality, most platforms, including eSignal here, don't do it according to the way it really should be done. I can show you on TC2000 later. So it's red because it closed below its opening price, but it actually closed below yesterday's close. So while a positive close, it's negative because of the close below the opening price. So does it signal weakness? Sure. But, you've seen other red candles and they haven't followed through much at all, right? Really one day. They followed to the downside, not at all. Gap down being bought, gap down being bought. So very little selling in this move up since Christmas. Is this the time when it's going to follow through? Maybe so. I mean, the weekly chart is up, eight higher weekly lows. We talked about that yesterday. It's up near this resistance area. We've covered the internals. They're at an extreme. So that does support. Let me just take a look quickly. That does support the potential to move lower. So as we do every day, we wait to see how the close is. We wait to see, I'm saying waiting for confirmation of a change in our bias. All right. So a red candle, a black candle doesn't change the trend. It's a sign of weakness for the day. Then we see if it follows through. So the markets are lower this morning. So there is follow through. But as mentioned before, and look at the spiders here, by the way, even less red candles than the Qs. But does it actually follow through and break a prior pivot low? Does it really break any support? Close below a prior day's low for starters, and then so going to a higher time frame, and we look at the higher time frame as well. So we start on the daily, but does it close above the open, below the open? What is the trend? Is it making higher highs and higher lows? Is it at resistance? If it shows a sign of weakness the next day, does it close below the prior day's low? So we'll see today if we get a close below the prior day's low, or do we get another situation where it's bought. This one closed below the prior day's low, and then there was a reversal the next day. So step-by-step process of one day to the next. Where's your next support level? Does it pivot and create major support as it moves back up? And as I wrote in the advisory letter, last Thursday's low was going to be a significant reference point this week. So as it begins to move up here, we get a swing low after today, assuming it doesn't go all the way down there today, which would be a big move. So I think it's unlikely. This will then become major support because we have three higher lows to the left and the right. And then a break below that would violate the trend on the daily time frame for the first time since it began moving higher here. And as mentioned, it would make sense because of where it is and location of the weekly time frame and our internals here, where they initially moved to an extreme where you got breadth and sentiment in agreement. Actually, it was over here. Now sentiment has moved even further into the static level of 0.80. And you can see here on a closing basis, option traders are buying calls into the close as they did on Friday. They're historically wrong at turning points. So it probably is, based on the internals of what I said, we're likely at a turning point. So now we wait to see, does it actually do what I just mentioned, close below a prior day's low? Does it eventually break? And so on. So step-by-step systematic process. And of course, we'll start looking at individual stocks that it might be showing relative weakness, because those would be what I'd refer to as short bait. Those would be kind of low-hanging fruit as to the ones that might go lower. Now, if they've been going down for a long period of time, well, then, you might say, well, they might not go down very much. So, we can find things in the middle of their trend. But in any event, going out and picking on the ones that have been the strongest doesn't make a whole lot of sense. You better to wait for those to actually violate their trends, maybe create an M top. In other words, show some solid signs of distribution before going after the strongest. And so, been wrong since December, meaning the option traders, or what? I'm not following what you said, Alex. Yeah. Well, they were dead wrong at the low, of course, in the big time. And, then we can see the day-to-day what they're doing. But look, we just follow along. And I've just, I've focused on the extremes when breadth and sentiment are in alignment, because those are the highest probability times when they're going to be wrong. Yeah, so we'll see where this day ends. Obviously, it's starting off on a negative note, following through 173. So you go 173 into the gap fill area. So a little buying stepping up there. So some follow through. We'll see where it ends up. If the day ends up green, closing up near the high, well, then it's, business as usual. And we'll see where it goes from there. And spiders, same thing, right? Up near resistance. We've seen, you might think that it's typical for all of these markets to be doing the same thing at the same time, but it's not always that way. Many times, one is leading the other, or they've got different patterns. And, at this time, they are very much the same. And this market move off of this V bottom has been unusual historically, for it to move the extent it has with little to zero correction for this many weeks in a row. I think I mentioned yesterday, CNBC reported it's been like 24 years since there was a time where there hasn't been a weekly loss. So weekly loss doesn't mean a change in trend, but a corrective week. There hasn't been one. And that's odd. No, we'll see if this is it. It pushed up above the 200 here. We'll see if it follows through. Give me a sec here, guys. Okay. And, well, here's transports. Another red day closing below it's open. And this one truly is a red candle. Well, this would have been two. It closed below, the prior day's close. But you'll see what I mean when we get and look at TC2000. When you see the Qs are actually a green candle, but a dark green candle because it closed below its open. So something to keep in mind when you look at your platform and you're seeing red or green, is it basing that on just below the opening price, or is it taking into consideration whether it's actually closing below the prior day's close as well? So here, a little bit more weakness. It hasn't broken down through any support. And we'll see if this follows through. It doesn't trade much pre-market, but you can see we're starting to get a red candle on the weekly. It's only Tuesday, so we don't put a lot of weight in that. And we'll see if things turn around. So far, this is going sideways after clearing the 200. It's got a little bottoming tail from the day before yesterday. So positive. Well, if it closes below here, well, then we got a real sign of weakness. Don't be objective about it. I like to point out it's not about the indicators. It's not about the trend lines. It's not about moving average crossovers. It's about what price does, in the way I've explained it. Right? So Dow is down, and you can see where this is in relation to this resistance area. Pretty much the same thing as we're looking at. And what does dark green mean? Trader, I'll show you later when I bring up TC2000, but basically, look, when you're looking at the candles, if your platform does it that way or it gives you a choice, if it's closing above the prior day's close, it's green. If it's dark green, it means it closed above the prior day's close, but below its opening price. Whereas if it was a hollow green candle, it closed above the prior day's close and above the opening price. And it does the same thing with red candles, obviously just the opposite. But it's a way of seeing, say prices were going down and you got a red one, but it was, say, you just flipped. And, you had a hollow red candle. So it closed above its open, but below the prior day's close. So, some sign of buying that went on there. Yeah. eSignal doesn't have it either. And the only other platforms I ever seen had it besides TC2000 was Metastock. All right. Oh, let's look at the futures, where they're at here. And a little buying coming in here. Just look, it's a churn. It's a grinding move up. Yesterday, we got a topping tail. And it's a first sign of any real selling. I mean, here you got a little bit and got this move down at the initial, but where are any topping tails? So a little baby one there, but this one broke out. So a little bit more bearish as to going sideways for a few days and this topping tail. And as mentioned, Friday into the close, the wrong way option traders were loading the boat on call options that this market was going to rip higher. It gapped higher, and hats off to the ones that took their money early in the morning. But the ones that hold on and they thought it would continue, well, they didn't fare so well by the end of the day. And as mentioned, we'll just see where this goes. Does it go sideways? There's whatever news coming out. We've got Home Depot that's down here. Cat was downgraded. So that's down. So there's some stocks that are weighing on the market, and we'll just see how much it follows through by the end of the day. Q's here down, but no big deal. Not in relation to this trend, but we got a topping tail, the beginnings of a breakout failure. All right, same thing with the Dow. And bonds are up here a little bit, but just sideways over the last couple of weeks. The question is, can it break out above these highs or break down below these lows? As long as it's in here, neutral. Gold down a little bit. It popped up and, you can see got a topping tail there from last week. Momentum stalled in the area of resistance, but it hasn't violated the trend. This is our major support. And trend is still up here, but at resistance. So it's just beginning to consolidate. And we'll see how it follows through. Oil coming in a little bit. And now, well, again, it's only Tuesday. But this kind of, a second here, let me get my little drawing tool here. We had this sell setup right here. And it didn't follow through. It reversed back up with a 180, bullish 180 up. And now it broke above those highs. And this is going to be pretty interesting to see, do we get a bearish close this week? Because, maybe we're getting what I would call a failure of a failure. And pretty erratic kind of price action. But we'll see where this goes by the end of the week, whether it closes this way and whether we get some downside or whether... If it can negate this, that would be pretty bullish for oil and oil stocks. So we'll be keeping an eye on that. And really, that is about it for me. Just looking at, let's take a look at this for a sec. As with the market up where it is, volatility has come down to support here. It's beginning to reverse. Sentiment, as I explained, breadth, as I explained. So it's time to be cautious here on the long side, yet there is some still good looking patterns and stocks that look like they can go higher. So while there's some signs of trouble in this latest bullish trend, it's not done until we actually see some significant break of support. So until then, we'll play it day to day. We know risk is rising here for longs, and we'll wait to see what gets this market to correct and when it's going to happen. So all yours, Dan.
All right, thanks. Good morning. I usually start with all our open positions, and they're all actually fine. So let me go to the gappers first, and then we'll come back. We'll come back to opens unless you have a specific question. THC, big gap, 28 bucks, nothing to do. So remember, I'm looking for what I call tier one, which is multiple time frame and alignment. The gap's not too big. The pattern is good. The reason I have Goldman here, it's not really a gapper, but Greg told me they had some news pre-market about some bigger litigation expenses, and it's really not affecting them much. DDS 73.5, big gap. This is all support now. That's a put spread candidate, but it's not tier one because the gap is too big. I just saw this little guy going by the ticker this morning. I see a $1 stock trading at, 3 and change. Something's up, and you can see that. It looks like a penny stock, but we'll actually come back to it. India, gapping up here, 25.85. I like this for a 30-minute high. Daily, weekly, monthly are all in alignment. Put that in a little window. Tesla gapping down. Elon Musk still having problems with his Twitter. And it's funny, Kramer was on saying he needs one of those devices that, when you're drinking, it shuts down the communications. So 30-minute low, I like that as a call spread candidate. Hertz here, excuse me, 21 and change. We don't buy gaps far from the 20 after an extended move, but I like the monthly. Look at this multi-year consolidation with a price void. And these things got clocked with, I remember Uber and, competition, etc. But something's up. It's not a tier one again for the reasons just reviewed. FND 3750. So that's a small little bear island gap. That could be a day trade, 30-minute low. CAT, Greg mentioned, downgrade 136. These are not directional trades, but if it can't bounce, a call spread candidate for Friday. Etsy, we had on our radar, but it had earnings this morning, and now it's gapping all-time highs. Nothing to do with that now. Trader was mentioning race yesterday. Daily, weekly, I like as a put spread. We'll keep an eye on that for Friday. MNK, I looked up earnings again, and now it says March 5th. So I'm just going to stop looking at him until I know. Macy's had earnings up 23 cents. It had an expected move of $2 and change. So the short option sellers into earnings are getting paid on this one, because that's a very small move on earnings, but no pattern for me. It's a new trade, LNG 64. It's a big fat nothing. Home Depot down 184 and change. That's a call spread candidate also. AZO earnings ripping to all-time highs, 974. The gap's excessive, nothing to do. THC we already looked at. Shack gapping down under 50 bucks. That's a bearish gap at their support. Nothing to do. RRC, this one I like. I put this in a letter pre-market to the advisory folks. This looks great. A little gap to 1128, gapping over last week's high. Beautiful, beautiful retest here. Put that in a window right here. So that's tier one. I like that. RCII 18 gapping up a little bit. This could be 30-minute high play. Not too bad. Oki, there's insufficient volume. Moss 34. This is the put spread candidate. Over 30-minute high. That was earnings. Moo 14 bucks. And that sounds like a bio, and I don't like the gap, etc. I'm just getting rid of you. Waters, this was carryover yesterday. Algin, carryover. Bullish, shop, carryover. Here's Alex Ozer under the low. Looks like a short. V-cell. I like this. It gapped up on earnings. Let's watch the pre-market here. I'm gonna put that in a window. It came in kind of hard, so it's not a clean pre-market. AA had earnings, but I like this huge, massive, beautiful double bottom on the weekly. Square I was watching yesterday, but it kind of lagged. WDC we were watching. EXAS. I like this as a 1, 2, 3. It gapped up, coming in a little bit, but that's a tier one setup. Stamp, these are all carryover now. TIFF. CVS, remember this earnings gap down, and somebody asked us in MT Live, hey, does that bearish gap negated? And we said, absolutely not. And we said, if this thing can't bounce, it's going lower. Look at the monthly. You know, this could easily 57. I mean, if that's cracked. DVC, we have a position in that in our ETF letter. Oh, did I look at AYX? That's a beautiful gap to all-time highs. So the question is this gap excessive? It looks a little excessive now, but I've seen so many trades. It rips $10, $15 from now. We come back and look at it, and it's like the gap doesn't look excessive now once the chart rescales. Look at Goldman here, flat again. Wow. After that news, so I guess the market knew that they had litigation problems. There was no surprise. All right, now I'm glancing at our opens to see if there's any problems.